I am AI avatar of CA Ratan Mundra. India is witnessing one of the strongest enforcement drives ever seen in the outward remittance ecosystem. Tax authorities, financial intelligence units, and enforcement agencies are now aggressively examining suspicious overseas fund transfers linked with fake PAN details, crypto wallets, offshore gaming networks, and manipulated liberalized remittance scheme transactions. Investigators are reportedly tracing payment trails connected with countries such as Thailand, Dubai, Singapore, Hong Kong, and Malaysia. The concern is not about genuine students, travelers, or investors sending money abroad legally. The concern is about disguised remittances, where funds declared for education, travel, or personal purposes may actually have been used for betting platforms, offshore gaming, crypto settlements, or money laundering structures. This new wave of scrutiny is changing the entire compliance landscape for banks, fintech companies, consultants, and resident individuals across India. The Liberalised Remittance Scheme, commonly called LRS, is a facility introduced by the Reserve Bank of India allowing resident individuals to legally remit money abroad. Under current RBI regulations, a resident individual can send up to 250,000 United States dollars per financial year for approved purposes, including overseas education, medical treatment, foreign travel, investments abroad, gifts, donations, and maintenance of relatives. However, LRS was never designed as a loophole for undisclosed financial activities. Every outward remittance must have a real purpose, proper documentation, correct beneficiary mapping, and valid source of funds proof. Today, regulators are focusing on whether the declared transaction purpose truly matches the actual end use of the money. That single question is now becoming the foundation of India's new remittance enforcement model. Authorities are reportedly examining cases where education purpose codes may have been misused to transfer money abroad for unrelated activities. In some cases, investigators suspect that fake or duplicate PAN structures were used to bypass annual remittance limits under LRS. At the same time, digital payment trails connected to offshore gaming websites, crypto ecosystems, and betting platforms are also being analyzed. This investigation marks a major shift in India's financial monitoring approach. Regulators are no longer relying only on customer declarations of basic banking forms. Instead, they are using PAN analytics, UPI tracking, transaction behavior analysis, crypto tracing, and cross-border intelligence sharing to identify suspicious patterns. The compliance environment is rapidly evolving from paper-based verification to data-driven enforcement. When the Indian rupee weakens against the US dollar, regulators become extremely sensitive to unexplained outward remittances. Every overseas transfer increases demand for foreign currency. Genuine transactions are allowed and protected under RBI regulations, but suspicious or layered remittances can create broader concerns related to financial stability, tax leakage, and illegal capital movement. This is why enforcement agencies are now paying closer attention to offshore gaming settlements, crypto-linked transfers, and repeated outward remittances routed through high-risk corridors. Banks and payment intermediaries are expected to ask more questions, conduct deeper verification, and monitor transaction behavior more carefully than ever before. For ordinary individuals and families, the message from regulators is becoming very clear. Overseas remittance should never be treated casually. Every transaction must have a genuine purpose, supported by admission letters, fee invoices, medical estimates, travel records, investment documents, or beneficiary proof. Authorities are also warning against practices like splitting remittances across relatives, using someone else's PAN, routing funds through friends, or transferring money to unrelated overseas individuals under education codes. Such activities can potentially trigger FEMA proceedings, income tax scrutiny, anti-money laundering investigations, and banking restrictions depending on the facts involved. Banks and authorized dealers are now under immense compliance pressure because regulators expect stronger due diligence for outward remittance approvals. Earlier, many remittance requests were processed largely based on forms and declarations submitted by customers. But today, authorities want evidence-based compliance and deeper transaction analysis. This means banks may now examine PAN duplication patterns, source of funds details, beneficiary profiles, repeated remittance behavior, and possible links with gaming or crypto ecosystems. Financial institutions are increasingly expected to identify suspicious transaction behavior instead of relying only on customer paperwork. Fintech platforms, payment aggregators, and money transfer operators are also facing growing regulatory attention. Authorities are reportedly examining whether domestic UPI collections were later routed toward offshore gaming websites, betting operators, or crypto-linked entities. This means fintech companies can no longer depend only on customer declarations. They must build transaction monitoring systems capable of identifying suspicious behavior patterns, such as repeated small value transfers, mismatched beneficiaries, education remittances to unrelated entities, and unusual merchant settlement activity. Compliance is now becoming behavioral, analytical, and technology-driven. One of the most important dimensions of this investigation involves crypto assets and offshore gaming ecosystems. Authorities suspect that some entities may have collected payments domestically before routing settlements overseas using crypto wallets or foreign payment structures. This creates multiple regulatory concerns, including tax evasion, FEMA violations, anti-money laundering exposure, and concealed financial trails. Regulators are now increasingly combining UPI analytics, PAN intelligence, digital payment monitoring, and crypto tracing technologies to identify layered transaction structures that may disguise the actual movement of funds. It is important to understand that genuine overseas education remittances remain fully legal and protected under RBI regulations. Students and parents should not panic simply because authorities are investigating misuse of education purpose codes. However, documentation discipline is now extremely important. Students should maintain admission letters, fee invoices, visa records, accommodation agreements, and beneficiary instructions properly. Education consultants must also ensure that student remittances are routed directly to legitimate educational institutions or genuine service providers without mixing unrelated payments. The biggest change in India's remittance ecosystem is not the law itself. The biggest change is enforcement intensity. Regulators are now using data analytics, PAN matching, UPI tracking, crypto tracing, behavioral analysis, and international information sharing to identify suspicious foreign remittance structures. For genuine remitters, the safest protection is transparency, documentation, and accurate reporting. For banks and fintech companies, the future lies in stronger monitoring systems and intelligent compliance controls. And for consultants and advisors, the responsibility is now much larger than simply processing remittances. It is about helping clients build defensible compliance frameworks before regulatory scrutiny arrives. India's outward remittance system remains liberal for genuine needs, but the compliance environment has fundamentally changed. The future of LRS compliance will depend on proving the real purpose, real beneficiary, and real economic substance behind every overseas transfer. Moon Says and Management Consultants LLP, a trusted partner for SEZ and IFSC excellence, a pioneer in establishing SEZ and IFSC units within GIFT City and India, delivering end-to-end IFSC setup, operational support, and handling compliances. Risk management, renowned for deep expertise in regulatory approvals, capital markets, fund management, insurance, finance company, foreign university, BATF, and ancillary regulations and fintech. Expertise in customs clearance for aircraft and ship procurement, leasing, GST, DSPF, IFSC. Comprehensive support covering registration, reporting, and regulatory transitions, ensuring ring fencing, transparency, and global compliance standards. Join our network. Scan the QR codes below to stay connected with us.